Hey, what's happening, friends? I'm back with my buddy Kevin from NFM Lending. He's the Hawaii market leader. And we're gonna be talking today about like some common concerns that we're getting from the marketplace. Hopefully you're thinking about those things. You've had these concerns and maybe we can help ease your mind a little bit or just give you some additional perspective. So if you're in the market to buy a home, you're not discouraged. That's the biggest thing is we really, we don't want to sell you on anything or encourage you, but if you're feeling like it's not the right time, you're feeling like down in the dumps and it's been really, really tough, I think we have some good perspective on how you maybe shift your mindset a little bit and give you some options. So the first one, Kevin, is obviously in today's world, oh my goodness, Kevin, interest rates are so high. I just can't buy right now. I don't want to buy at 6.5%, 7% interest rates.
So that's the big question. A couple things. I think a lot of consumers are having trouble differentiating between the best time to buy a house, or if it's a good time to buy a house, and if it's a good time to get a loan. And they want those two things to line up, and sometimes they don't line up. Sometimes it's a really great time to buy a house, but not a really great time to get a loan and other things. I think for me, a lot of times we see on Instagram, the answer to the question is now a good time to buy. We see it everywhere. The answer to that question is this. If you know where you're going to be living in the next 3 to 5 years, and you have the financial capacity to make the mortgage payment, it's typically a good time to buy. If you don't know where you're gonna live in the next year or two, or there's some uncertainty, or you might get transferred to the mainland, or you're having a relationship either coming together or going apart, it's probably a better time to rent. And that is a personal decision that you can make based on your own finances and your own ability to know. But if you've lived in Nonaka for 7 generations and everybody lives there and that's your job's close by and your kids go to school there, and it's probably a good time for you to buy because property prices over time don't go down. And the only people who lose money in real estate are people who have to sell because they have those short-term horizons.
Right, long-term, we're not financial advisors, but long-term, over 10 years, like nobody's ever lost money buying.
Very safe bet, very safe bet. Yeah, if you have the financial means to make the payment.
So what if I don't want to, interest rates are too high and I don't want to pay the extra that it's going to cost for my mortgage? Like, why should I buy now? Even if I really need a house and it's perfect for me.
So there's a couple ways to get around the high rates. And there's a couple points to make about higher interest rates. The first one is you have to figure out in dollars what that high interest rate means to you, right? So typical interest rate, probably around the high 4s, 5% over my career. Right now we're probably in the 7s. So from a lot of people, that's about $200 to $250 a month in extra payment. So not great, but if we take that $200, let's say, multiply it times 12, it's $2,400. Every year that you have that interest rate, you're gonna be paying about $2,400 a month more than you would have. So why is that a big deal? Well, if you think about it, when you do the math, homes appreciate, Dylan's the expert on this, but I think the 100-year average in Hawaii is somewhere 4 or 5%, something like that.
Yep,
something about 5%. Yep. So if you use that and you say, on a $500,000 house, 5% of $500,000 is $25,000 a year. Yep. So you're paying that extra $2,500 in order to make that $25,000.
Seems like a good deal to me.
Yeah, the numbers make sense if properties are appreciating, right? So that's kind of the first thing to think about is when you're looking at a deal, how much dollars is this actually costing me extra? And then how much am I making in appreciation? That's something to think about. A lot of people don't go that deep with it. The second thing to think about is what's gonna happen if you're not purchasing a home right now. You're betting on one of two things. One, home prices are gonna drop and you're gonna get a great deal. And what are the...
Which would, you have 0% chance of happening.
There's really nobody projecting that happening right now. And the other thing you're betting on is, well, interest rates are gonna get lower and I'm gonna buy at a lower interest rate. And that's very likely. Very likely that'll happen in the future. So, but let's think about it here. What would happen if interest rates drop? Well, if interest rates drop, we're gonna see an influx of buyers. I'm not totally sure what it is, but I think it's every 1% the interest rate market drops, some amount of millions of people come into the market, right? So more and more people come in as interest rates drop, and the house prices are going to go up. And what I keep saying is, I want you to own the house before the interest rates go up, because I want you to be able to profit from the appreciation and then refinance and take advantage of those lower interest rates because you already own the property.
Yes.
right? So that's the strategy.
And if we flip your example earlier, which is a great way to think about it. So if the house today is 500,000, and we're using obviously very cheap, very conservative numbers for Hawaii.
Double it for $1 million.
Yeah. If the house is 500,000 today and the interest rate's, almost 7%, but I say, I'm gonna wait a year because I think interest rates are gonna come down. So, we wait a year, interest rates come down to 5% or 5.5%, and then you buy, but now the house is 525 or 540 because it appreciated. Now you're paying $30,000, $40,000 more for the house, where you could have just paid $2,500 a year for the higher interest rate 12 months ago. So you really are net losing like $25,000, $30,000 in net appreciated loss because you waited for the interest rate to go down. So it's really not an intelligent financial decision, right? It doesn't work. I mean, on the face of it, it seems like interest rates are high, but if you look at the net cost over time, it actually will cost you a lot more money to wait, right?
Exactly, exactly. And then there's a strategy of, well, I know guys, but I still don't like the higher payments, because that's true, payments are high. Well, there's really two ways to get around that. One, a lot of people when they're buying their first house have this feeling that everything they do is gonna last forever. Like this is gonna be the loan forever, this is gonna be the payment forever. And really, rent payments go up over time, housing payments typically down over time because you refinance. Refinance is getting a new loan to pay off the current loan with a better payment. And one of the things that we're offering to all of our clients who are buying right now is we know all these loans are gonna refinance sometime in the next 18 months. We're gonna proactively manage those for you. And then when that refinance time comes, we're not gonna charge you a loan fee. We're not gonna charge you an appraisal fee so we can get you into that new loan, that lower payment when the time comes. But I already know what people are saying. But Kevin, what about my payment between now and the free refinance? What's gonna happen then? Here's what's gonna happen then. A lot of times online, you'll see something called a buy down or a 3-2-1 buy down or all these complicated ways for purchasing a house. In layman's terms, what you wanna do in order to get the payment down is to get the seller to give you some money to help you pay your mortgage payments for a period of time after you close so that you have an artificially low payment because the seller helped you out. And then when rates drop, you refinance and you keep that payment rolling for you. So we can talk about all the details on that, but just know there are strategies in place to get that lower payment for now, and then another strategy in place to capture that lower interest rate when the time comes.
Makes total sense.
Yep.
Okay, so here's my next problem, Kevin, is interest rates are high, housing prices are high, and I want to be a first-time home buyer, but I need a 3-bedroom, 2-bath home in a nice neighborhood, and I just can't afford it today.
Yes, so this is a problem that we've seen with this kind of current generation of home buyers. Current generation of home buyers is really kind of skipping a step and going directly to the dream house. What I've found is, most of the people watching this, we're normal people. We have normal jobs, we make normal incomes. It's almost impossible with a normal income to save up enough money in order to bridge the gap to buy the dream home. So I know what everybody's saying, oh my gosh, we're never gonna get our dream home. If you think about everyone you know who lives in their dream home, there's one of two things have happened. One, they miraculously got some sum of money and were able to jump, and that's a very small percentage. Two, they lived in a smaller house or a condo or a lower priced entry-level home for a period of time, and then they used the money they made off that property to buy the dream home. What I always say, because no one wants to do that, right? What I always say is, buy a house you hate, then sell it to somebody who's also going to hate it, and use the money you made in order to buy the pretty house. Because that first step is so critical, and because we've talked so much about appreciation and what's happened historically, that's typically the jump people make. It's too hard, especially in a lot of our markets here in Hawaii, to jump right into that dream house.
So what does that mean, Kevin? I gotta live in a condo? Like, I don't wanna live in a condo. I want a house.
That's how a realtor answers it. When from the lending point of view, I can give you a payment that makes sense to you, and I can give you a cash to close number that makes sense to you, and figuring out those two numbers, how much money do we have to invest into a home purchase, and how much money do we have as our monthly housing budget, and we take those two numbers, get them to an expert real estate team, and they can walk you through what properties make sense for you. But there's likely gonna be some trade-offs with that first house, because the only other option is futilely try to save and watch the market appreciate. And we see a lot of frustrated people out there doing this, right?
And I'll share my personal journey with this, right? Anybody who's been to my house, my friends out there have been to my house, just think my house is great, right? I got a nice view, I got a big yard, I mean, lots of space, great area to entertain, big lanai, and everybody thinks it's so great, I'm so lucky, right? But they forget that I bought my first house in Hilo on the other side of the island, which I didn't want to live in forever, and owned that house for 9 years and made $90,000 over the appreciation of 9 years on that house. And then I bought my second house, which was a totally original 1970s, had 0 renovations, in a great neighborhood close to where I grew up. But my wife and I knew at that moment that was not going to be our dream house. It wasn't our forever house. It was just another stepping stone to get us from Hilo to Kona. We lived in that house for 5 years, made $100,000 in appreciation in that house because the market was great during that time. And then those 2 houses led to the house we live in now. And so it's not like we just woke up one day and bought the house that we live in now. It was a 15-year journey to get to the point where it became feasible. And again, we were just normal people. My wife was a school teacher. Like, it wasn't like we came into some huge sum of money, but the only way we have built up the equity that made the purchase of the home that we live in today possible was living in a house that we didn't like, and then living in another house that we didn't like, and then getting into a house that we like a lot. I don't know if it's gonna be our forever home, but this is a story that Kevin's heard a million times, I'm sure, but you really gotta apply it to your own life when you're making your plan, especially if you're a first-time home buyer. And I can't also tell you how many retirement type home buyers that I've helped over the years, where they're moving from Colorado and they're going to retire in the Big Island, and they buy in South Kona because they can only afford what South Kona prices were, and then they spend a couple of years, maybe 5 years in South Kona, and they say, you know what, I've made $100,000 in appreciation, I'm going to sell this house and use that down payment money to buy me a house in Keauhou, and then they buy in Keauhou, and now they're closer to where they want to be. So this applies wherever you're at in life, right? First-time home buyer, maybe later on in life. I mean, anytime you're doing a real estate investment. So yeah, love that.
And one kind of like side note I'll make to that. Let's say you're watching this and you're a big earner, right? You make great money and you're like, well, I know this doesn't apply to me. I can save, I can do it. If you're a big earner, the best way to do it is remember, you don't have to put 20% down to buy a house. You put a small amount down and get a monthly payment that'll like make your eyes pop out on the bigger houses. But that's one way to kind of skip those steps. But remember, guys, if you go low down and you go expensive house, that payment is going to be big. But we can help you with strategies of what that looks like if you're feeling super strong about low debt, big income. That would be the only kind of like side option I would have, is if you're hearing this and be like, well, I make a lot of money, maybe this doesn't apply to me. There are options for you as well to get into the house you want sooner.
And then maybe talk a little bit about, because this is, I think, is a perspective that's kind of missed sometimes, right? Is once you get locked into, you buy a house and you get locked into a mortgage, that mortgage payment, I mean, as long as it's fixed rate, it's not a variable rate, never changes over time.
That's right. So the big difference, if you're a renter right now and you're trying to wrap your head around like being a homeowner and those economics, when you're a renter, what you can usually anticipate, is that rent payment's going to go up. So this right now, where you're sitting right now, is probably the lowest rent payment you're going to have. As you go on, the rent payment goes up. Housing's different. Because you go in, most people typically don't put 20% down. You've got mortgage insurance, you've got a bigger payment because it's got a bigger loan amount. The rates are a little bit higher because you put less down. That payment, no one ever bought their first house ever and got their first payment and said, oh my gosh, it's so affordable. I can't believe it. What have I been doing renting? It's so cheap to buy a house. That payment's going to be on the scary side, right?
Uncomfortable. It should be uncomfortable if you're doing it right.
Correct. Yeah. And then, but as the years go by, a couple things happen. One, inflation makes your payment lower and lower and lower and lower compared to your paycheck. Two, you start to own more of the house in relation to the loan, which starts to make the terms of that mortgage as you refinance better. So your payment goes down and down and down and down because of time and inflation. Like everybody that's watching this right now knows somebody who lives in a beautiful $1.5 million house that has a payment of like $1,800. It's because when they bought their $1.5 million house, it was $600,000. And when they got their loan, it was $600,000. And now they owe $400,000 on $1.5 million, and they get much more favorable terms. House payments go down as the years go by. And if you can just get through those first 2-3 years with that more expensive payment, the light at the end of the tunnel is amazing.
And then the huge benefit to that is when you're in the $600,000 house that you owe $400,000 on, it's worth $1.5 million. Now you have 700,000 in equity that opens up a ton of options. Kids to college, second home investment. I mean, starting a business, like it really is a superpower to what financially you could achieve in life, because you went through those first 3 or 4 years of struggle to get through those mortgage payments. And 10 years later, you have all of these options that you didn't know were available to you because of that like short-term sacrifice, right?
100%, you know, 100%. Home equity can be used for a lot of good, and you know, you kind of become your own banker at that point.
All right, so what else, Kevin? Any other like major top of mind concerns that you're hearing from the marketplace that we want to talk about?
The big thing for me is this concept of there's a really good time to buy a house and there's a really good time to get a loan, and sometimes the two don't line up. And I think a lot of, you know, what I'm seeing out there, my opinion is that it's a really, really good time to buy a house if you can make the payment and if you know where you're going to be living over the longer term. And even if it's not a really good time to get a loan because of where the interest rates are, if you have faith, you will see that those rates will get better. It's projected the prices will go up. And I think that we're in an environment right now where people can really set themselves up for success. And it's really interesting to see what's going on in the market.
Just get with the right people, the right partners, the right teams, and we'll help guide you in the right direction. And if the time's not right, we'll be the first two guys to tell you the time's not right. Wait a while, get this thing fixed, and make sure that you're not put into a situation where you're uncomfortable is okay, unsustainable is not okay, and you know, that's always top of mind for us. So if you guys have any questions, comments, put them in the comments. I'll put our contact information down there, and we're always available if you have any specific needs. And again, you can't learn everything on YouTube, so reach out to us and we'll go through your specific situation and make sure you get the right advice.
100%.
Thanks, Kevin.
Thanks, guys.